Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on January the 3rd for a Forex market analysis for the week ahead. Just want to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. And if you haven't done so, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked. And also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Alright, without further ado, let's get to our live action screen. We have the Forex-Trading-Unlocked.com website pulled up here. We have the workstation page already ready to go. Alright, step one, let's check out the economic calendar and see what we have going on here. Alright, so as far as today, we are through most of it. There's a couple of numbers still coming out around the globe, nothing significant. But as far as tomorrow, we start to launch some numbers, economic numbers that actually do mean something. So we have retail sales that will impact the euro. We have the CPI for Switzerland, and also we'll have a little bit of a tick, I'm sure, here or there that will make things move. We also have the unemployment numbers for Germany. That will be something that might stir up the euro a little bit. We have for England, we have consumer credit. So the pound may have a little reaction off of that. Canada, interesting enough, we have raw material prices. Canada, like Australia, is a commodity-driven country. This is a number that actually will most likely influence the Canadian dollar to some degree tomorrow. And then for the U.S. dollar, we have the ISM and manufacturing PMI number. That is also something I would definitely watch out for. It is likely to stir up the interest rate market a bit, and if it does do that, it is more than likely to stir up the currency market as well, because remember that interest rates are a function of currency pricing. So it's very likely that the dollar come 9 o'clock tomorrow will have a little bit of interest and possibly an increase in volume, I would think. So I'd be mindful of that. All right, then we have consumer confidence for the U.S. dollar yen also tomorrow. As far as Wednesday, we have normal oil numbers that will be coming out. That'll mean something. The ADP national employment number probably will be something to take a look at. I'd be mindful of that. I think that's probably going to come out as expected. I wouldn't think that they're going to have much of a difference on that one, but we'll see. Then we have, once again, the crude oil numbers that are coming out. That'll be an impact for the dollar. Let's see. Then we have Thursday. Consumer goods for Germany, that's something, and manufacturing number, that's something that will probably have a little spin on the euro-US dollar. They also have the CPI for Germany. That's another number that may move the CPI, or excuse me, the euro dollar a little bit. Then we have, let's see, composite PMI for the pound. Producer prices for the EU as a whole, that's something for sure. That's month on month and year on over year. It'll be interesting to see how that is. I would assume that those are going to be climbing at an escalated slope. CPI also for Germany, that's another number that's going to come out. It'll be big. Durable goods and factory orders for the U.S., that will be very big. I know that U.S. pork exports, sales net, what have you, doesn't seem to be something that you would want to be concerned about because unless you're a cattle trader, or excuse me, a meat trader, not a cattle trader, a pork belly trader. But we'll see. I think that this is something that's a key number for inflation and supply issues to watch, especially because it is food, and food is something that's a very big indicator right now for the markets moving forward. Initial jobless claims will be interesting. Durable goods will also be big. Factory orders, all these are economic numbers that are sure to stir up the bond market. I would expect that the 30-year Treasury bond and the 10-year note are going to see a lot of action. And there's something else you should be mindful of because of the fact that we know now that the Fed will be raising rates most likely 2 to 3 times over the course of the next 12 months. The question is, will it be sooner than later? I believe that it probably will be sooner than later. Probably not yet in this first January, the first meeting of the year coming up. I think it'll probably be around the second or third meeting before they start to pop the rate. I could be totally wrong on that one. I'm not 100% on that, but I think that they still want to evaluate a lot of the numbers coming into the new year before they really pull the trigger. So, all right. Now we have CPI for the U.S. dollar yen also. And then we have Friday. Unemployment for the Swiss, not so much. Industrial production for Germany will be big for the euro. Retail sales for the Swiss, probably not so big. And normally it is a big number, but I don't think that's going to really shake up the Swiss too much. We have CPI for Germany, that will be big. And then we have retail sales and consumer confidence for the euro as a whole. Those will be big numbers for the euro. Then we have the employment number for Canada. We also have the employment number for the US. That one, believe it or not, this is something that is not going to stop anymore, but the employment number is always a big monthly economic number. I would be very mindful of what's going on with employment in the US. This is something that is definitely going to be huge for the currencies moving forward over the next 12 months. All right, step 2, let's conduct some market analysis here for you and see what's going on in the world, all right? All right, so Euro US dollar, as you can see, is having a big sell-off today. It's hanging on its lows as we speak right now. It's kind of a dead trade. It's not really ticking around very much. It's just hanging on its lows. We are starting the new year. Everyone's coming back online. However, with COVID protocols and things like that, I can't speak for what's going on in Europe as far as the business community and the trading community. But I do know that as far as in Chicago and in New York, there's a lot of people that are now working remotely from home because of the new COVID protocols and escalations of Omicron, blah, blah, blah. We're going through the next fear factor wave. These are things that are giving strength to the dollar right now and definitely leaning, having the foreign currencies leaning on support. All right, so what do we have going on here? Well, I'll tell you what we do have going on here right now. We do have a potential sell signal forming with today's trade with the euro. Okay, right here we have a bearish engulfing line that is forming right here on today's trade. Okay, we've taken out the whole body of Friday's trading. And if we were to settle where we're at right now, this would confirm a short-term sell signal. Even though this market has pretty much been going sideways, it has been railing off of this low here up until the high of Friday on the 31st for New Year's Eve, and now the market is coming down. Is this confirmed? No, it is not. So don't try and get in front of a trade right now. If you're not already short in this trade, I would wait until the close of today before you jump on such an action. Like I said, if we settle around where we're at right here, or if we settle below the opening, let's see, the opening on Friday was at $1.1323. So as long as we settle at that price or lower today, that will confirm a bearish engulfing line sell signal. Okay, now does that mean that we're going to have an exacerbated sell-off? I wouldn't say necessarily. Right now the momentum is really nowhere in this currency, as you can see, for the whole month of December. Let's see, it had a range of, let's see, the high was around 113.82 and the low was 112.21. So you're talking about $1.60 as far as the range for the euro for the whole month of December. So it was a range trader's delight, trend trader's disaster for December. So now are we going to break out to the downside for this trend? Well, overall, as you can see, this market has been trending lower. If we go all the way to this furthest high out, as you can see, there we go. Okay. All right, so here's the downward sloping trend line, keeping the trend intact. As you can see, before we hit this downward sloping resistance line, we have this sell signal that is forming today. So by attrition, we would be coming out and breaking out of this slope. However, with the way it's selling off today, I would expect it probably have some follow-through going into Tuesday and to Wednesday, maybe even into unemployment on Friday. Remember, we have a bunch of economic numbers that are coming out for the euro this week, predominantly starting with, tomorrow there's a bunch, and then we have Thursday and Friday for the most part. So I would think that if this trend, this signal is sparking the beginning of a new trend, you will probably see that the market, probably, most likely, within the next few sessions, we'll be testing the lower boundary of this range that we were trading in for the month of December. So I would key off of this $12.21 area and be very mindful that any failure from here has us pressing the flirting with new move lows, and I would expect that we will take out the low that was set here in November. Now, are we going to sell off radically? Right now, we have to see how the next couple days shape up and then how the numbers shape up. Remember that Europe is going into lockdowns in a severe way. They are really, really clamping down. Italy has imposed really harsh restrictions. France has as well. You have all kinds of nightclubs and restaurants that are now shuttered for the next 2 to upwards of 4 weeks. This is something that we are going through it again. So as far as it's not about what you think about the narrative, it's just a reality of what's going on. And this is starting to impact the U.S. too. I can't speak for the whole country. It's definitely divided. But in New York, and I'm in Chicago, and now they have new measures where it's if you're not part of the short-term experiment in the jab, you are not allowed to go and do anything anymore. You can't go out to dinner. You can't go to public places. You can't go to all kinds of things. So as this does happen, you have to realize that it's going to cause a clamp down on the economy in the United States as well. So that's why I don't think you're going to have an exacerbated sell-off with the euro, because the dollar is going to be taking some pressure from those things that are happening. But right now, currently, as you can see, we are just off the lows. Euro US dollar is bearish. So let's go to the British pound US dollar. Okay, so the British pound US dollar here is also falling on support, not quite as heavily as the euro is. The pound, because of oil and because of some other things, has a little bit more to gain. Now, even though the overall trend for the pound has been negative, currently over the month of December, you can see that the British pound started to be a little bit of a range trade in the beginning, first half of December, but then boom, it sparked a low here on the 20th and has started this, at least right now, an upside correction. Today we are selling off. Do we have a sell signal here? We do not have any sell signal here. So I would be very cautious right now. The short-term trend is bullish, with oil looking like it wants to break out to the upside again. It's very likely that the British pound will have a little support versus the dollar and other currencies. I would be very cautious being a bear right now with the British pound US dollar. Obviously, this last low here from the 20th is a key support level. Any failure from 131.74 or trading around in this range will have this market flirting with new trend move lows. So the question is this just a correction to the upside, or is this the beginning of a turn in the market? Really hard to say with the lockdowns going on and being imposed in the UK. This is also disrupting the pound. So we'll see how either ahead of the curve or behind the curve the countries in Europe are. Now remember, the pound is no longer part of the EU, even though the pound has always existed, even through the when England was part of the EU. Remember, Brexit has occurred. We are in post-Brexit now. We don't even talk about post-Brexit anymore. It's been so long. But that's why there's probably strength in the pound US dollar versus the overall weakness that we are seeing in the euro US dollar. So be very mindful of this. We'll take a look at, in fact, here, look at the British pound AUD. This is a trade you might want to be watching for. See how explosive this is? This is because Australian dollar is down today, so is the pound today versus the dollar. However, even though Australia is a totally commodity-driven country, the lockdown measures around the world and also the ones that they've had there are so strict that it is really putting pressure there. So this is a trend. Look at this. There is pound strength versus the Australian dollar. I would be mindful of this trade here for those of you that trade either the pound or the Aussie crosses, that this is a really hot trade. Most likely you're going to see a challenge of these highs from the beginning of December sometime within the next week or so. So there's a little pop you might want to look at. Now for the US dollar Swiss, as we wrap up our European analysis. Okay, look at this, like a balloon underwater. Here we also have a potential buy signal. Like if this market settles for sure where it's at today, we have a confirmed bullish engulfing line. So like we had the bearish engulfing line, which is in the euro. We have the bullish engulfing line forming in the US dollar Swiss. This is very key. When you start to see high probable Japanese candlestick patterns evolve or form at the same time in major markets, there's typically a very big turn coming on with the dollar. So if we look at the Dixie, here's the dollar index. Friday it was tapping its lows. Today the dollar index is coming back on and challenging resistance. So are we going to have a buy signal in the dollar index? We're going to have to wait and see how that is. But let's go back to the US dollar Swiss. So as the dollar turns, and right now it seems like we are bottoming in the dollar, looking for some strength. We have confirmation with the euro and the Swiss right now on a daily basis, intraday, that strength wants to turn this market around. And now, does that mean we're going to get a monster rally? Well, not really. If you look at, here's the base on this whole chart going back to August. We basically be trading from 90.88, so basically just under 91 to 93.74. So you're looking at a $2 range that this market has been swinging around. Now, unlike the euro that has been totally sideways through December, this one was whippy. I mean, it was sideways, and then it's been trending lower for the last week and a half, just like the pound had been trending lower as well. So I would think that most likely you're going to see follow through over the next few sessions. We're coming into the middle part of this range. You can see what this market was doing in December. It could get very, very choppy. So I would say if you're not long right now, I would wait for confirmation of this buy signal today. I mean, anything can happen. It's only 11 o'clock Central Standard Time. We got a full trading day to go get through. So we'll see whether strength prevails and whether we do have a valid signal come the close of today's trading. Just to let you know, for compliance sake, and we are currently long the US dollar Swiss. We're also long the US dollar yen, which is something that we're going to get into right now. So, US dollar JPY, let's look over what's going on in the Asian markets. As you can see, the US dollar yen trade is pushing resistance slightly, but not as radically as it is in, say, the Swiss or the pound, as we've seen how it's trending today. However, this is the little bull that could. It is falling, it is pressuring resistance and looking to try and break out of this high from November at around 115.55. We've had 116 as a price target in the US dollar yen for quite some time. It's been bobbling here, and but it based, and now it's been trending higher since the beginning of December. You can see it's been inching higher, crawling higher. No really big moves except for this one day here and this one day here. Also back here when it first based. But 3 out of 20-some trading days doesn't really make a trend now, does it? However, each day you can see it's positive. There's very little red on this slope. So the question is, will we have a breakout to the upside today? Probably not. I would say that the trading for the US dollar yen is very, very, very tight. Just to give you a little clue as to what to be mindful of for the US dollar yen, watch the energy sector. So here we're pulling up the CME site just to show you real quick. You can always look at what's going on with interest rates and all kinds of other things. Oil today, as you can see, is up about a little over half of a buck. So it's just under $76 a barrel. If you see crude continue to trend higher over the next couple sessions, this will be one of the driving forces that in the short run is going to help certain commodity-driven currencies. So the pound, because British Petroleum and blah, 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 and then a bunch of other interests for the UK, they're very strong as far as oil producers, even though they don't produce it so much around the UK, but they own the interests around the world. So an uptick in the oil futures most likely will help to drive the British pound US dollar trade higher. Simultaneously, though, it will put pressure on the euro US dollar as well as a couple other non-commodity driven countries. The Swiss, you probably will see this will help follow through with the US dollars over the Swiss, meaning that the Swiss will be weak. Australian dollar, for the most part, will be probably stronger than some other currencies, except for versus the pound. It has to do because of the degree of lockdown measures. So we'll take a look at that later. Something you also might use is when you check out the CME market tab here, go to interest rates. This will show you the 30-year, the 10-year, and the other ones. As you can see, you have the 2-year, 5-year, 10-year, and 30-year. This is significant. The US dollar is impacted by the pricing of interest rates. Okay, so today the U.S. Treasury bond futures are down 2 full handles. That means 2 full dollars plus 6 more ticks. So this would be each dollar in the Treasury bond futures is 32 ticks. To a Forex trader, that would be a pip. A pip and a tick are the same thing. Okay, so each dollar, this is down $2, is 32 ticks. So that's 64 ticks the market's down plus another 6. Okay, so that's down 70 ticks on the U.S. Treasury bond futures just to start off the week. This is huge. As interest rates go down in price, that means interest rates go up. Okay, so there's an inverse relationship. So as interest rates are going up, this is why you're finding strength in the dollar as well, okay? So this is going to help to fuel this trade. So we'll see how the markets close today. If the dollar index sets a buy signal, which it may do because of the pound and what's going on with the Swiss, then it's very likely that you're going to see a lift in the dollar for the next 3 to 5 trading days, or at least going into Friday's unemployment number and other economic numbers. So does it mean we're going to be an overall bull for the rest of the month? I'm absolutely not even going to bother trying to lean on that one. But what I am going to tell you is that it's very likely that we will continue to challenge resistance for when it comes to the US dollar versus other crosses. So be mindful of this. But once again, we are long the US dollar yen. 116 is our first price target, and then 122 is our longer term target that we're looking for. We're looking for oil to get above $100. We're looking for oil to hit 150 sometime in the next year. Inflation ain't going anywhere, folks. I mean, it's kind of funny. I don't know what math you may use or not use, but you know, just a couple weeks ago, the Fed says, you know, we're only running at 7% inflation year over year. Well, I don't know where they go shopping or what they're dealing with in the world, but almost everything that you can buy out there has gone up at least 50% over the past 12 months. Actually, over the past 12 months, 10 to 12 months, let alone upwards of 100% or more. So now here's the thing is, if this continues, it's going to really shake up the markets in a big way. So why do we look at these interest rates and also oil commodity? Because this is helping to drive the pricing for currencies. Okay, it's a very big deal. It also means that the buying power for the U.S. as the dollar gains in strength, our exports become more expensive, but our imports become cheaper. Well, that's great in certain regards, except for it's not good for our businesses. And as far as imports, well, right now we need to be more concerned about our economy than helping to fuel other ones around the globe, especially with the supply chain issues that we're incurring. So, all right, so US dollar yen is trending higher. It's a bull. I would be mindful only a failure from this last swing low here of around 113.13 would have us on edge, flirting with new move lows back down to around this 112 area. I don't see that happening. What would make a move like this occur, or most likely influence a move like this to happen, to fall upon support? So if you are bearish here, here's what you're most likely going to need. You're going to need a big rally in the interest rates, meaning a turn from where they're going and trending right now. I don't see that happening, but who knows? There's a lot of economic numbers. Lots of things can happen, but the odds of getting a big rally now in the interest rate markets would be only if the Fed was to shift their stance as far as raising interest rates and say that, well, they're definitely not cutting them, but if they were to say that raising interest rates are off the table for at least like 6 months, then perhaps you might see a shakeup like that. Not likely to occur. Okay, so oil, if there's a tremendous sell-off in oil, meaning that it gets below 65 dollars a barrel, then I think you would see the US dollar yen trading back down towards it below this 112, probably back down to 111 towards this 110 area. Don't see that happening. Those are the factors that I think you're going to need in order for that kind of a trade to emerge. All right, let's look at the Australian dollar, US dollar. Remember that we were talking about the Aussie versus the pound. Look at this, how it's selling off today. So there's more weakness in the Australian dollar, US dollar, than there is in the pound. That's why you have that strength in the pound Australian dollar. Now, interestingly enough here, remember how we had different signals forming? This is why I think we're going to have to see what happens with the dollar index today, because it's most likely going to give us a buy signal once the close happens. We'll see. Here we have a bearish engulfing line sell signal forming. Now, unlike many of the other currencies, this has had a pretty defined uptrend for the past month of December, for most of the trading during that month. Now, is it bullish? Well, it had been in a bullish correction because overall the trend has been lower over the past couple months. Over the last 6 months, it's relatively sideways to lower, so very neutral to bearish, not bullish. This correction as of today, it looks like it is halted. Okay, meaning that this is a correction. So I'd be very mindful of what happens with this currency as far as strength and weakness. As we move into this new year and the new lockdowns are imposed, remember that Japan is completely opened up. There's no more lockdowns in Japan. So that does give strength to the US dollar, or excuse me, the Japanese yen, but not when it comes to the Australian dollar, US dollar. In fact, you know what? Let's take a look at the Australian dollar JPY cross. All right, see how this is selling off? Remember how I mentioned that they're not imposing lockdowns and COVID mandates anymore in Japan? This is a big trade right here. I would expect the Australian dollar, US dollar, Japanese dollar to continue to trend lower over the next few sessions, if not the next month, as this COVID thing does fuel up. Even if it doesn't fire up like it did a year ago or the prior year, I would say that you are most likely going to see this market under pressure. So we're looking at some potentially really good signals forming. We have to wait for the close. So what does that mean for Australian dollar, US dollar? Well, it means the Australian dollar, US dollar is going to continue to be weak. That's why we're looking for strength, being a bull for the pound Australian dollar, and now we're also looking for the Australian dollar yen to lay on support. Okay, so these are things that are forming today. We have not had confirmation. Please remember, do not try and get in front of a signal. Do not try and be Mesmo, the magician, and say that, oh, I can tell you when a signal is going to happen before it occurs. No, you can't. Anything can happen in the marketplace. So wait until the close, wait for confirmation, and then we jump on these signals. So we have a lot to look at over the course of this week as the trading unfolds over the next few days. All right, so now let's look at the New Zealand dollar, US dollar. This is acting a lot like the Aussie. Now here we have a bunch of currencies that are putting up both buy and sell signals, but it's where the dollar is gaining the strength, that is getting the positive note, and the other half of the currency cross is getting the weakness. So as we see this happen here, also New Zealand dollar, US dollar, this helps to go with our theory that we are potentially going to have a buy signal in the dollar index, whereas the dollar index has been hard to get a bead on a lot of currencies and the overall currency market over the past month. I think that we have divergence that is now causing these currencies to set a new trend. So am I bullish to US dollar overall? Absolutely not. Am I bearish? Absolutely not. But short run, it does look like we're starting off this year with the US dollar bull. So key off of some key numbers here. We'll take this high and we're going to go off of today's high right here. Or we can actually move this up a little bit. Let's move it off of these. All right, so if we use this as our downward sloping resistance, holding this trend intact, we are falling short of this buffer here of downward sloping resistance. We have the sell signal, and should this manifest today, it is very likely that we will be challenging support. So I would be very mindful of this low area here of around 67 even. Any failure from here in the New Zealand dollar, US dollar, it was very bearish. Now, unlike the Australian dollar, I don't think you have the momentum in the New Zealand dollar to push support like you do there. I think you're going to have more of a basing, but yet leaning towards the 67 even. Could it get below it? It's very possible. Is it most likely going to sell off harshly through that level? It's a tough one. So I would be very cautious and be mindful of your risk if you're a bear for New Zealand dollar, US dollar. We'll come up after today with that. Once we'll see if this sell signal does manifest, and then we'll have some price targets for you. But until the close of today, we don't want to get ahead of ourselves. Now, US dollar Canada, this is interesting. We actually are long this currency as well. It's having a breakout to the upside. This has a bullish engulfing line forming. Now, this is a tough read because as a whole, we would be pretty much thinking that this market has come to the end of its correction. Now, should we get a confirmation of a buy signal here today, I would be cautious. Is this top going to be challenged and taken out? It could be, but we're still viewing the US dollar Canada has been a wide range trade for months. Now the question is it really a bull or is it a bear? So if we look at support here from the last swing low down to here, well, we've taken out, as far as this upside correction, we've confirmed at least a neutral environment from this taking out of this upward sloping support line. Or we could be basing. Excuse me. If you look at this as far as resistance, excuse me, $28.32 trading below here, this seems to be the buffer. Okay, but if we go down to here, here's the bulk of our trading here from July going into December. It's been between this $1.25 and a $1.28 area. We spiked above a $1.29. Question is how high can we go? I think that this is going to be a rough one. If oil continues to trend higher and interest rates continue to trend lower, meaning higher rates, then it's very, very likely that this is going to be a tug of war trade, because Canada is a commodity country. It's an oil producing country, so the price of oil going higher lends strength to that. However, the interest rates scenario, coupled with the lockdown measures in Canada and some restrictions there, probably will have us most likely continuing to buffer up against resistance. I wouldn't expect a big breakout to the upside. I think right now you have to look at it as challenging resistance before it falls back on support. Be mindful of the fact that we also have a potential head and shoulders forming. So if you look at here, okay, and we take this off of the low from Friday, this is key. So you have, that is now our neckline. Then we also have the low from Friday here. Any failure from $1.2621 confirms definitely bearish momentum and strength, and it would also cancel out any potential buy signal from today should this arise. So be very mindful of this $1.2621 if you are a bull. Any failure from here has this market on edge. It could be choppy and a grind, but you do not want to be bullish below here. Now, should we get above this $1.2832, use caution. So we got to wait until we get this signal, whether it does or doesn't occur, and we'll come up with some levels. But I would also use caution with this one. If this is a head and shoulders forming, we use Fibonacci here, then somewhere, and this falls, wow, right around this 128.32. Look at this. This is a Fibonacci line right here. Wow. Okay, so that's significant. So right here, this is a fib line. And if this fib line stays at $1.2832, so let's say we do have the buy signal here, we're going to probably have a buffer up, a lot of resistance in this zone here. I would use caution, expecting a potential top somewhere in this zone here. Could we break out to the upside? Absolutely. Anything can happen. However, if this has only been a corrective move to the upside and now it's starting to run out of gas, and if this is a head and shoulders, this is the thing you got to look at. And for those of you that aren't really up on head and shoulders, this is the shoulder right here. Okay, this is our first shoulder right here, and then this top up here is our head. Okay, and now we're looking for the next shoulder to occur. All right, so let's say that this is a head and shoulders. We would expect somewhere for the market to run out of gas in this area and then fall back on support, taking out this neckline right here, which is slowly going up in trend. And then should we take that out, very likely to test this low of $1.2621, in which case all bets are off, and I would expect to see the US dollar Canada fall back below 125.18, probably around this 124 area. So we have to see what's going on here. We have conflicting ideas. I think that this kind of scenario works out well. A short-term buy signal to push us up into the next shoulder, run out of gas, fail, and then hit on support. That would get us through the first week of economic numbers and see what challenges we have to start this year off in this trading month, and then reverse gears. So let's see, we'll see how that happens and manifests over the course of the next couple trading sessions and couple weeks. All right, now let's look at the crypto market. BTCUSD, Bitcoin. Look at this. It's been going sideways for the past couple of weeks. It's a chop between 52,000 and just above 45,000. Is it going higher? Is it going lower? Well, right now it ain't going anywhere. So I would say that wait for a signal, okay, to the upside or the downside. There is no trend here. It is just basing. All right, ETHUSD. Let's look at the Ethereum. Ethereum is looking to have a little bit of an uptick here. We had a short-term Harami buy signal right here, another high probable Japanese candlestick pattern. It is not the strongest buy signal. It is usually more putting a pause for the cause before more than anything, which is what it did here. I put the brakes on the slide. helping to form a base. As you can see, the trend isn't very strong. I would expect this to grind and most likely try to challenge resistance more than support. If there's a failure from the low here from a couple sessions back here, what is this, on December 30th, then I would be very mindful of new move lows. Is it going to sell off in a big way? I don't think so. But I would be cautious as it does grind support and wait for a more valid buy signal. So short term, we have a little bit of a buy signal, but there's not a lot of strength to really bank on there. All right, XMRUSD. Let's look at Monero. Monero, on the other hand, here is looking a little weak. The trend has been lower, as you can see, for the last couple of months. We had a nice upside correction that, as of the past 2 sessions, is falling back on support. I like Monero in the long term. I think at the levels where it's at right now, down to where the lows were of December, it's a good buying area. Obviously, the market's trending lower. It's an upside correction. I would use caution here as a bull. I would wait for a reason to buy down here. Maybe look to buy in and start to piece into the market here for longs, and just be mindful of that. Overall, are we very bullish? Not extremely bullish. I don't see this market going to like 2,000 or anything, but I could see it getting back above this high, that swing high from a couple sessions ago, and get back to around the 280 to 300, 320 level before it starts to turn back on support. Now let's look at the DOGE, just to be mindful and remind people of what a dog the Doge really is. Going nowhere over December. This is a greater fool's theory if there ever was one. By attrition, it's breaking out of the downside trend, but it's all sideways. So we'll see what happens with this one. I think that if anything, it's going lower than higher. So, oops, we got the dog, not the Doge. There we go. Same thing. Excuse me. So Dogecoin here, trading around 17 cents. Could it go lower? I think this thing is eventually going to go down towards a penny. So I would look to sell out of stuff more than buy into this market. So if you have a position on any uptick, I would say try to get yourself out of this cannonball loser, because there's just no future in it. It's one of personal. When it comes to people who do like the Doge and are bullish on it, they're either so long and so upside down in their position they can't help but being to float that kind of idea, hoping to find some other suckers to get into it. I don't care how you market this one. The technology is not sustainable. It's embraced by people who would basically still be a fan of a buggy whip, you know. So be careful if you're flirting with this one. I hope it's throwaway money, and if you've already thrown money into it, get out of it. So, but that's up to you. That's just the way we're looking at it. So let's look at the Euro US dollar as we close out this session today. We don't have any questions on the chat, but we do have some nice viewers. I want to thank you for your time today. All right, Euro US dollar once again hanging on its lows as we speak. We are looking for confirmation of the sell signal. Remember, between the euro, the Swiss, we have the Canada, we have a couple other markets that are forming high probable Japanese candlestick patterns simultaneously. Whenever you do have this kind of situation, is nice, because that means that typically you're going to have a signal in the dollar index that you can usually base a good trade off of for the next 3 to 5 6 sessions. And considering all the economic numbers that we have coming out, I would expect it to be a choppy trade, no matter which way it trends, whether you see strength in the dollar or weakness in the dollar or whatever currency cross you're looking at. So we'll be mindful. Remember, do not jump in front of trades. We still have a lot of trading left for the afternoon session yet to come through. And until we have closure on the markets, none of these signals are valid. Remember, between now and the close, all these markets could reverse gears and cancel out any even semblance of these signals. I've seen it happen before. Holiday markets are over, baby. We are back to work again. It is 2022, January 3rd. Let's kick off this trading year and have a very profitable one. All of you out there, we're looking forward to working with you. Please, once again, if you have not done so already, make sure that you subscribe to our YouTube channel Forex Trading Unlocked or our Twitch channel, Forex Trading Unlocked, or even do both. We would appreciate it. Make sure you subscribe, like, and share our videos if you would please, to help us out and spread the word of Forex Trading Unlocked. And also check out our website, forex-trading-unlocked.com, for all of your Forex information. All right. So thank you very much. I'm Teddy Keckstead once again. Want to appreciate your time. You guys have